Hello and welcome to the Dukascopy TV studios in Geneva. I'm Sam Meredith, and joining me today is Professor Robert Pillar to discuss the Glencore story, and from the Geneva School of Business Administration. Welcome, Robert.
Thank you very much, Sam. Pleasure to be here.
Now, first of all, to what extent is Glencore threatening the prosperity of the global financial markets, and potentially is this worse than first feared?
Well, it's been a fascinating story to watch. Roller coaster ride. You can hear the investors screaming, as it goes down. Glencore at its IPO, and then when it merged with Xstrata, some people say that was the height of the commodity boom, and that was heralding the end of that. And perhaps that's the case. Their shares have gone down from 500, I believe it was 538 pence per share, and it's down to around 120, 125. Some people have, some analysts have said that this could be a Lehman Brothers moment, so of major impact, as you're suggesting. I tend not to believe it. I tend to think not. That Glencore it's still, at the end of the day, it's a physical business, physical commodity business. Yes, it's huge. They have thousands and thousands of counterparties, but the story is around, I think, three themes with commodities, and the biggest theme, of course, is China. Glencore is fundamentally a metals, or its results are very much based on metals, and China has been the biggest consumer of these commodities. So slowdown in China has greatly affected the price. Okay,
so what more can the company do to try and calm its impact on the markets?
Well, they announced they had to face up to the criticisms, and so they did a new equity issue for $2.5 billion. Their debt, they're trying to cut what they call their net debt from $30 billion to $20 billion, so they'll do some number of asset sales. Some things are on the block. Some copper mines, although they're small, they want to sell the grain business, which they only bought into a few years ago. They made some big investments there. So at the moment, that seems to be a plan that seems to have placated the investors to some extent. Now the question is, to what extent will that be realized? I think what it says about Glencore, very interesting, is BHP Billiton just this morning announced that they were not going to make any cuts in commodities. And that's the other thing Glencore started doing. They closed down some copper mining capacity in the Democratic Republic of the Congo. They also closed some zinc capacity, and they're very big players in the zinc markets, so that led to a 10% jump in the zinc price in one day when that was announced. So it's a combination of getting the debt down and trying to see what they can do to get commodity prices up to that extent. However, it said BHP Billiton announced they were not going to do any cuts. They're in very much some of the same commodities as Glencore. And I think one of the issues then is BHP Billiton is in a good position because they have low-cost production assets. So they have large mines that as a core part of their strategy is to be low-cost, and they can withstand much more easily the decline in commodity prices, and also they have in terms of their debt ratios, are a fraction of what they're like half of the debt ratios that Glencore has. So the market isn't worried about them. But it also suggests perhaps that Glencore is operating some high-cost assets.
Okay, so how are investors likely to be impacted from the story of Glencore, which is ongoing?
Well, Glencore had a bounce. They went down 30%, then they went up again 30%. Last week. So a real, classic roller coaster ride. I think the long term, long term, I don't know, year to whatever solution is, they're really a victim of the commodity prices today. And that's, they're very much, their success is based a lot on metals. So, copper, zinc, they also, coal, And all these commodities, the basic story, and I tell my students this all the time, I tell my students, if anyone asks you what's happening in commodities, you just say China, and you're right 80% of the time, right? So in this case, it is all about China. It's all about the slowdown in infrastructure investment. China, the boom was caused by that, the urbanization in China and the investment that has happened there. Some people believe that was a one-off. It'll never quite come back that way. Maybe there's a difficult time still for a while to come, and I think again what BHP Billiton is doing is really signaling. In response to Glencore, I'm sure people were looking for them to cut, and basically they're saying, no, we're a low-cost producer, and they're not going to sacrifice their market share. So does that perhaps herald some more problems for Glencore? Possibly, yes.
Robert, thanks very much for your insight today.
Okay, well, Sam, thank you very much.
And thank you for watching. Be sure to click back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.